So I believe all success with your trading strategy starts with your edge. If you have an edge in the market, you're pretty much good to go and you'll see some good results in the future. But if you have no edge, then that's something you gotta work on as soon as possible. The best traders out there have an edge, they have something that they can rely on. And I want to teach you today how to get there, what steps you have to take, and we'll do it in the fastest manner to get results as soon as possible. What's up traders, welcome back to Bangkok in Thailand at my apartment. Today I was thinking a little bit earlier, I was at the coffee shop trying to kind of review some things that I've done in the past videos, and I came across this video a while back about how to have an edge in the market, what to do to get to having a proper edge in the Forex market. And turns out that the video is like really old. It's like back when I was in Bali a while ago, and I shared this principle of like having an edge, how that worked, and people seem to like it. But I think we need to update that based on the things that I've learned in the past, based on my experience, what I've seen in the market, and kind of how things changed a little bit, and make it more concrete and better so that you guys can look at this video, watch this, apply it, and get some result. And I'll show some example with my personal trading, how that works, and that will give you, I think, a good idea of how to get that edge, how to develop your edge in the market. So without further ado, let's get started with that right away. I want to share some points that you need to understand, some things that you should understand first, like things that are kind of myths in the market that people tend to believe, but it's not the right thing. And then I want to go through some requirements you need to have an edge, with an example on my personal strategy, the Bond reversal strategy. But so first things first is we gotta think about the myth in the market. First myth that I see is people think that having an edge in the market is all about being right most of the time. Like they want to predict the market, they want to say, oh, I know where USD is gonna go, I know where this pair is gonna go. It's gonna go to this level, 74.5, that's it, finish. And it's not how it works. You could try to predict, but there's been studies showing that people that try to predict the market are about as 50% accurate, which is like as good as nothing. So don't predict, that's a waste of time. And so it's not just about predicting the market. You don't have to know where the market's going all the time. That's the first thing. But the second thing is that people will say, okay, so I'm not gonna predict the market, but I'll try to have big gains, like my trades have to be like home run. I need to double my money every time. Or I need to see prices like euro go from like 1.10 to like 1.50. And that's stupid. An edge, when it comes down to it, is a combination of these two things, but to a certain degree. And there's no way I believe that you can have like a really high win rate and a really high reward on every trade. That doesn't make sense, because that's like the dream of every trader. There was such a thing, then people will make money, they will talk about it, and then other people will jump to it. So only if you make a small profit, I think that's fine. I think you can still make a lot of money, and we'll show kind of how that works. So understand that having an edge, and this is really important for you to apply and to understand, having an edge is about combining your win rate, so how often you win, with your average reward. So what factor do you win? Do you win like 1 times the risk, 2 times the risk, 3 times the risk? So R multiple. Okay, that's how we calculate your edge. As soon as you find a combination of these things, then you're pretty much good to go. Okay, I'll have a quick example for you guys just on the screen. And just to give you kind of an example of how you calculate your edge if you have an edge or not in the market. Okay, really simple. Let's say you win 40% of the time. And every time you win, on average, that's based on the stats of many trades, on average you win 1.5 times at 40%. So you do 1.5 times 40, okay, that gives you 60. And then you subtract the other part, so the times you don't win. So the times you don't win is 60% times 1, because you lose usually 1 compared to 1.5, and that gives you basically 60 minus 60, so 0, okay, or 0.6 minus 0.6, 0. So in that case you would have no edge, you're like break even. At the end of the day, you could trade this all the time, be at your chart 24/7, it doesn't matter, take all the trades that happen in the market, you will be break even, okay, overall, if the stats continue being the same. So that's just an example to show you how you calculate your edge and how that works. Now we need to go to some example, and I want to show you the data of my strategy. So here we go. I'll just pick numbers that I know by heart, that I kind of remembered. They might be a little bit different on the screen with what I'll show you, but I want to show you an example of what that looks like. Okay, so for the past month, my win rate and I have like basically a strategy where I have to take profit. So one at 1-to-1, one at 3-to-1. We'll do both example. Okay. So my win rate for the past month at 1-to-1 has been around, I believe 46%. Okay, something of the sort. So 46% of the time I win at 1-to-1. So the first trade I win 46% of the time. Okay, and when I win, of course, it's 1. So we can calculate the edge of this. Basically, it's going to be losing because it's 46% minus 54. So 46% minus 54% equals minus 8%. Okay, so that's losing overall. But it doesn't matter because we have a second part to the strategy. And the second part is this. So my second take profit is at 3-to-1. Okay, on these trades, I tend to win an average of 3 when I win, and I tend to lose an average of 1 when I lose. So these trades, I believe the win rate is around 30%. Okay, between like 28-30%. And last month was a losing month, just to be clear with that. But I'm just getting these stats for you guys to kind of see. Okay, the stats are still good based on what happened. But let's just say the win rate is 30% on average for these 3-to-1 trades. So you do 30% times 3, and then you subtract 70%. Okay, so you're like at 90% minus 70% is 20%. So now you have one part of the strategy at 20% and the other part at minus 8%. Okay, so we get an average of 12%. Now you gotta divide this by 2. Okay, so you get 6% because we only put in half the trade size overall per position we take. So that's just an overall of the whole thing. Okay, I hope that makes sense. These are like real like numbers that are like a little bit tough to calculate and everything for you guys to understand, but that just means that basically overall whatever number of trade you take, okay, you should do your risk per trade times your percent. So say 8%, that's your overall winning edge, and then you would see a profit per month. Okay, so how many trades you take per month times your risk per trade, and then times your percent you found, so 8% we'll say. Okay, and that will give you a profit per month based on the number of trades you take. Of course, if you increase your risk, you would get more profit. That's totally fine. That's just how things work. But that's a quick example of like how things go for my strategy. And hopefully these numbers on the screen were helpful for you guys. Now the last thing I want to touch on that's I think really important is on the side of these things. Like it's good to have an edge and everything, but you need to have some things in place, some requirements to be able for that edge to play out and to make you successful. Okay, if you don't have these, you might have an edge, but then you are not gonna be able to get the profit from that edge. So really important to apply these things, and these are two simple things. Number one, you gotta have a fixed percent of risk per trade, which means that like you risk 1% per trade. If you always risk different amounts, then your edge cannot play out because one trade is gonna be bigger, the other one smaller, and that means that you might earn less and then lose more on the other trade, which doesn't make sense. So have a fixed percent per trade or a fixed dollar amount per trade. Okay, to start with, that will be like really good to have, and that's a requirement. The second thing is your risk per trade has to be low, and it has to at least fit in with the risk of ruin of 0%. I've done videos on that in the past, how to have a risk of ruin of 0%, really important. And if you want to have a risk per trade that's even lower than that, that would be awesome. So for example, my strategy could work with a risk of ruin of 0% if I risk 3% per trade, but that's a little bit too high. So we want to go to like 1% per trade, where I feel comfortable. So you decide what you pick, you decide what you go for, but that's in a nutshell how things work. Hope you guys like this video so far. I hope you get the principle of having an edge. Comment below with your thoughts as always. Here are if you come up with the past video, appreciate you guys for leaving comments as always. And I'll catch you back here in Bangkok for another video pretty soon. Ciao.